Hi trader, interesting price action in the Forex market, and I think the candlesticks will provide a lot of value for this week's analysis on these four currency pairs. First of all, be aware that this video is shown to a global audience. Take a look at admiralmarketsglobal.com to see if it's suitable for you. Also, please be aware that trading for exchange and global financial markets is considered high risk. Please seek the advice of an independent financial advisor for more information on that. This video is for informational and educational purposes only. By continuing watching this video, you agree with this disclaimer and you are aware of the risk involved when trading. This is the pound-dollar monthly chart, and of course we have new monthly candles to look at because June has ended, and we see a very bearish candle, a big candle. But not only that, the close pretty near the low, the bears holding control throughout June, and also closing below the support levels indicated by purple here. Those historic levels, important support levels. Price was not really able to hold a close and break through those levels. You can see every time price approached those levels, price bounced, and now we have a close below it. So I do think that is a very bearish outlook when looking at this monthly candle. Just based on this, I would expect price to retrace part of last month's June candle before continuing lower and breaking last month's low. This is the natural kind of analysis we can derive from just looking at this monthly candle. But let's continue and take a look at lower time frames here. You see that last week's candle was a bearish candle, a bit smaller than the week before, but I think that last week's high definitely a resistance at about 135.36. So 135-ish, definitely a level, of course, for the bears to keep an eye on, because that could be a bouncing spot for further downside. All right, as we continue lower and lower, you see that now price is making consolidation on these daily charts. You see a couple of days going sideways. And on a 4-hour chart, I think it's a very interesting analysis in the sense that basically price is building a consolidation. And I think that if we have a break, if price breaks the green line, if it breaks below 132.20, there could be a breakout scenario as price then continues down to the 272 target after bouncing off this 23.6 fib. And also here already earlier at this 50 fib. So basically that would be the target for the downside, the minus 272 target. Price has still not gotten to its main first target, after which it could even continue lower to other targets like 225, maybe even down to the minus 61.8. Now that breakout does not have to happen at the beginning of this week. It might happen at the end of this week or even next week. Price is at a bouncing spot, potentially a reversal bouncing spot, because there's some support here. Will it bounce or not? I'm not sure. It could be the breakout, but if it does if it does bounce, then I would expect price to challenge basically last week's high, to challenge this 4-hour top and the 23.6 fib at 135. I'll be looking for bouncing spots, bouncing candles, bouncing confirmations like 1-hour engulfing twins, a 4-hour pin bar in this zone for a turnaround, and I think that could be the retracement of that big monthly candle, and price could then break this low and start to move lower again. So this is basically what I'm keeping an eye on the pound USD, a bounce to resistance and a turnaround, or a breakout to the downside. Now if price, for whatever reason, decides to break 135, then I still think that all of these fibs are turning spots and potential resistances, so I would keep an eye on those as well. Before I move on to the other three currency pairs, be aware that we have a lot of webinars this week. Again, great webinars like Nenet's weekly FX recap with setups on the majors and other pairs. We have his price action trading school looking at ATR breakouts. I myself taking a look at fibs on Tuesday and waves on Wednesday. And on Thursday, we both take a look at news trading. The Eurodollar monthly chart looks a bit different. We see a doji actually indecision on the Eurodollar, and in fact that has to do with last week that still had a relative bounce, a bit of a bullish candle in fact. So not as bearish as the pound dollar, definitely a certain outlook here, different structure at this moment. And if we look at the Eurodollar, I think we have a clear support level, the green line here, that needs to be broken before price could retest 108, a break of 108, sees a retest of 105, and the bottom around 104.50. Those would be needed for a bearish scenario. The other option is that price retests basically these highs in here. You can see this purple line coming in around 114.50. Very important. A lot of tests of that area, and price failed to hold above it, at least some intra-week pushes above it, but never ever has price managed to break above it with a serious intent. So that could be an important level, and price could re-challenge that zone. So let's take a look at the daily, and I think if we put a fib from here to there, I think that's the best fib at the moment, and I wouldn't be surprised if we get a really deep fib like the 78 or the 880.6 fib in this case. You can see prices making a first retracement already, and I wouldn't be surprised if we get some zigzag up to deep fibs, after which that would be an important resistance zone for a turnaround. On a 4-hour chart, that would look like this: 2 fibs on, a retracement fib in orange, and a Fibonacci zigzag in green. The zigzag basically indicating here the potential correction like this, up higher. So for me, the upside is a bit difficult to trade, but if there is a good 4-hour candle like this, and I get a retracement of that 4-hour candle, it could be worth it to trade up to the 272 target or the minus 61.8 target, right? That would be one way of trading it, looking for a good 4-hour candle to confirm that upside. Obviously, the most interesting trade is from the 88.6 fib, stop loss above it. That's above the top. That's the invalidation level, and or to look for a candlestick pattern at this spot, because there could be a lot of space to fall from that resistance level that has the best R2R potential. The other option, if price were not to make the upside and we don't get any bullish candles, but instead we get a bearish candle like this, the other option would be to wait for a breakout, but I guess the breakout would have to break below this trend line, for instance, and price would have to break below 110.50. I think that if that happens, we will get a bearish candle like this, we'll get some consolidation, and then we'll probably get a breakout like this. So that will be the breakout I would be looking for. Not the first one here, but the second one would be a better spot, I think, to enter as a more confirmation of the end of this corrective phase here. So those are the two options, I think. Will the corrective phase continue with a zigzag to the upside, after which I expect a turnaround, or will we get a breakout sooner? Moving on to the dollar yen, you can see price has been basically respecting the 50 fib with a bit of a wick. Is that all, or will price still continue down to the 61.8? Now looking at the daily chart, you can see an important level for that is 107. A break above 107, I think, indicates that price is bouncing at the 50 fib, and we can see a continuation of the upside. But if price stays below this resistance level, I think there's also a good chance that price actually might continue with one more leg to the downside. Looking at the 4-hour chart, this fib is important. A break of the 100 level, right, invalidates the downside, I think. But if price remains choppy like this and corrective like this, a break of this channel could be the moment of a breakout to the downside. And in fact, looking for a good 4-hour candle that breaks below this channel like this, for instance, could be the trigger that I'm looking for, in fact, for a continuation down to 95, down to this minus 272 target at 96.70. All right, so that is the dollar yen scenario. Bearish at the moment, but price is in this channel and could stay in this channel like this before turning around and heading lower. Last but not least, the Aussie, I think, is looking the most bullish of all. At this point, you see quite a lot of bullish candles. Yes, there are some wicks here. Therefore, a break of this resistance trend line indicated by orange would be good for the bulls. A break above this with a daily candle, for instance, closing above this orange trend line, I think increases the chance that price is going to make a zigzag up to the minus 272 target at 0.811, or even extend up to 0.8460. All right, that I think is the most likely at this point. So looking for a break of that weekly trend line with the daily candle, I think, and you can see basically here price stalling, but still making some upside. Let's put that trend line on this chart like this. That's the breakout I'm looking for. The downside might occur if price breaks through this particular support level, right? That would be a warning for the bulls not to look for upside anymore. And in fact, there could be a breakout to the downside to challenge the 78.6 fib down at 70.40. Hope to see you in those webinars this week. Make sure to take a look at avromarkets.com for all of your analysis that we provide, and wish you all great trading. Cheers.